Good morning everyone. My report is the continuation of Chapter 4, the percentage of completion method for construction contracts. So, the percentage of completion method for construction contracts. Under the percentage of completion method, the estimate gross of income from construction is reported based on the percentage of completion of the construction project. There are several methods of estimating project completion in practice, but the output method based on engineering survey is prescribed by the NIRC. Illustration. In 2018, Cagayan Construction Company accepted a 5 million fixed price construction contract. The following shows the details of its construction activities, the construction expenses, engineering estimate of completion. In 2018, they have 3 million. In 2019, they have 1.2 million. Here's the illustration as follows. The accounting for long-term crops depends on the harvesting frequency. Perennial crops, those that yield harvest through year. One-time crop, those are harvested once after the several years. The initial farm development cost of perennial crops like mangoes, mangosteen, coconuts, and bananas are capitalized and amortized over the expected years of harvest. The harvests are accounted for using cost basis or accrual basis. One-time crops are accounted for using crop year basis. The farming income is commonly recognized using the cost basis, accrual basis. However, long-term crops, those that take more than 1 year harvest, may be accounted for under the crop year basis. Crop year basis. Under the crop year basis, farming income is recognized as the difference between the proceeds of harvest and expenses of the particular crop harvested. The expenses of each crop are accumulated and deducted upon the harvest of the crop. Income from leasehold improvement. Leasehold improvements are tangible improvements by the lessee to the property of the lessor. Improvements will benefit the lessor when their useful life extends beyond the lease term. This benefit is referred to as income from leasehold improvement. Under the Revenue Regulation Number 2, the income from the leasehold improvement can be reported using either of the following method in option of the taxpayer. Number 1 is outright method. The lessor may report as income the fair market value of such buildings of improvement subject to the lease at the time when such building improvement are completed. Number 2, spread out method. The lessor may spread over the life of the lease the estimated depreciated value of such buildings or improvements at the termination of the lease and reports as income for each year of the lease and adequate part thereof. The depreciated value of the leasehold improvement is computed as follows. Construction of improvement multiplied by the excess useful life over the lease term over the useful life of the improvement. On January 1, 2019, Anderson leased a vacant lot to Greg under a 20-year lease contract. Greg immediately constructed a building on the lot at a total of 4.5 million. The building has useful life of 30 years. The outright method, under the plain wordings of Section 49 of Revenue Regulation Number 2, Anderson shall recognize the entire 4.5 million fair value of the improvement as the gross income upon the completion of the improvement in 2019. This is not an income, it is totality, but this is the amount referred by the regulation. Another illustration here is shown on your screen. Graph here basis in accounting method, and it's not accounting period. Use of different accounting methods. Taxpayer with more than 1 year, one type of business using different accounting methods can be consolidated and the income reported using the different methods. There is no need to restate the income to a common accounting method. However, the methods applied to each business should be applied consistently from the period to period. Change in accounting period and accounting periods. Under the NIRC, the change in accounting methods by any taxpayer and the change in accounting period the corporate taxpayer require prior BIR notice. The income tax reporting, the self-assessment method. In preparing their tax return, taxpayers declare the income and tax expenses and personally determine the tax due thereon. The government relies on the good faith of taxpayers in the preparation of their tax return but employs deductive techniques to ascertain non-compliance with under-compliance. Types of tax-related returns filed to the government. Number 1 is income tax return, withholding tax return, information return. Type of income tax return, they have 2, capital gains tax return and regular income tax return. The withholding system. Aside from the income tax return, the government also requires taxpayers to withhold, example, or deduct taxes on their income payments. These withheld taxes are called withholding tax. These are not tax to the taxpayer but the recipient of the income payments. The taxpayer must deduct the withholding tax on his income tax payments, file the withholding tax return, and remit the withheld tax to the government. Non-compliance to the withholding tax rules shall impose the taxpayer to penalties and fines aside from the disallowance of the expenses as deduction against income. Types of withholding tax. The final withholding tax, creditable withholding tax. Final withholding tax are the full taxes upon the income of the recipient. The recipient will not pay additional tax upon the income subjected to the final withholding tax. Creditable withholding tax taxes are advanced taxes. The recipient of income payments must report the income in his income tax return and claim the creditable withholding tax withheld as tax credited against his tax due. Information returns. A certain tax are also required to file information return to the government. These information returns do not involve any payment or withholding tax but are essential to the government in its tax mapping efforts and its evaluation of tax compliance. Non-filing of required information returns are also required to penalties, fines. Where to file income tax return? Manual filing income tax return. The traditional manual system of filing income tax return is by paper documents where the taxpayer fill up the BIR forms to report income expenses or any declaration required to be filed with the BIR. Under the NIRC, the income tax return shall be filed to the following in descending order priority with the Revenue District Office where the taxpayer is registered or required to register. An authorized agent, bank, revenue collection officer, duly authorized city or municipal treasurer. Electronic filing and payment system. The electronic filing and payment system is a paperless tax filing system developed and maintained by the BIR. Taxpayer file tax return including attachment in electronic format and pay the tax through the internet. Electronic and payment system is paperless filing system developed and maintained by the tax return including the attachment included in electronic format and pay the tax through the internet. Penalties for non-filing or late filing of information return. For its failure to file a separate information return, statement of list or keep of any record or supply any information required by the code or the commissioner on the date prescribed therefore, unless it is shown that such failure, provided the amount imposed for all such failure during a calendar year shall not exceed to 25,000. So that's all. Thank you and good day.